Part 2 of my video for the week starting 12th of November. Okay, WTI crude. Now then, this level held quite nicely, this support level just around 65.00, just above it. Once we broke that, I was calling the market lower, and wow, didn't we fall. So I think we did okay with that. I certainly wasn't suggesting any longs, and we kept breaking the levels that we needed to hit the next target. So I'm hoping I managed to keep you short for most of this move. Now it's quite interesting because everything I see on Twitter is oh, oil's in a bear trend and oil's in a bear market now, dropped more than 20%, blah blah blah, so it's going to go lower. Just as people start to get very bearish, guess what, we're about to hit an important support level. So I am wondering, are all the longs stopped out? Is there no one left to sell it? Maybe there's some big shorts in there now, and maybe we're just going to reverse. Would be typical of this market, really. So 59.00, we've got 38.2% fib support around there. It doesn't look like it's too far below. It's around 58.35, the 100-week moving average. So call it 60 ticks within that range, and you've got a decent support level, 58.95, 57.35. And you've also got the 500-day moving average, which is usually fairly close to the 100-week moving average, 57.89. So it's kind of a 100 tick range, isn't it? But on the grand scale of things, that's not a lot when you can see that we've fallen from 76 bucks down to 59 bucks. We've fallen nearly over $17. So $1 range isn't too bad. If you think that we can bounce after such a steep drop, really steep drop, in oversold conditions, this is where you want to be buying. You want to be out somewhere below 57.50, really. So it's probably worth the risk reward, because if we do get a bounce back, there's no reason why we can't get back up to, what's this low, 64.29 to 64.90. So certainly mid to high $64 area would be a reasonable target. It's a relatively small risk, isn't it? Risking 100 to 150 ticks to see a decent bounce in oil. That's all I can say on the subject, really. If we were to get back up to that $65 area, well, it's probably a sell then, but I'd have to re-examine when we get there. That's a weekly chart of the E-mini S&P. That's just a load of nonsense. The daily chart for the E-mini S&P. Right, now I'm pretty pleased with myself because although it's fairly obvious that you didn't need to be a rocket scientist to figure out the levels, but anyway, they certainly worked, and there were certainly some decent profits if you were trading and scalping these levels. So the first fib level of 27.30, around the mid 27.30 area, certainly worked initially at the end of October. Then we broke higher up to the 200-day moving average, which was around the mid 27.60 area. That worked perfectly too. Some shorts there gave us some decent money. We retested, and we were then needing to stop and reverse into a long on the break above there. Bang, straight up to 28.15.20. That was the high, 28.18. So the three big levels there that if you were trading them really did work. I hope you made some decent money out of that. And I hope you got short right at the peak last week and ran that short down to what was obviously the best support on the dip, down in that mid 27.60 level. So levels kept reappearing and kept working. Maybe you even bought into a long there and caught the bounce. So the big levels to watch, I've already mentioned them. If we get back up to that low 2800 area, 28.15, 28.20, it's obviously going to be a big resistance level. We're going to have to get up through 28.30 to continue the recovery. We've got that support down around the mid 27.60 area. If we get back below there, guess what? Yes, we're probably going to sort of 27.35, 27.30. If you can trade those three levels again this week, you're going to make some nice money. Bitcoin, if you've been following me on Twitter, you'll know that I've been winding up crypto bulls. It's one of my favorite pastimes when I'm sitting in front of a screen. The rubbish that they come out with as to why Bitcoin's going to $25,000 and all that crap. Well, I've been calling it down all year, and we really have managed to get most of the peaks, get short most of the peaks. And again, we did it here, 6,500, 6,550. Well, I think that was pretty much the high. For obvious reasons, trendline 100-day moving average. Again, not rocket science, but if you did get short, you're looking at some profit already of around 200 pips, and I think we will continue lower. The fact that we've broken 6,400 is negative, and we're holding below there. So I think it's down, consolidate, down, Clearly the next target will be down here at 6,200 for obvious reasons. If we break there, then you've got to watch this 6,100, 60.50 area, which is trendline support, but in a descending triangle, if anything's going to break, it's usually going to be the lower trend line, and then we'll be retesting the lows down at 57.80. Yeah, there's nothing bullish about this unless we can get up through 66.00, and then I'll have to reverse my view and look for a move up to 200-day moving average around the $7,000 area. I'm not going to show you the mini Dow Jones because it doesn't make as much sense as the S&P, so I might as well stick to the market that is making sense and is making money. The DAX has been tricky. I had 11,450 to 11,500 as the big resistance level, and it certainly did work on the way up. And then it certainly did work on these couple of days here, but since then it's getting a little bit blurred. Thursday and Friday, not quite so clear cut. Friday we got up to 11,550. So we seem to be magnetized, as I've written in my report, to that 11,500, 11,550 area. The question is, do we break below 11,400 and then collapse, or do we get up through 11,600 and, well, retest the highs up here, which I think that was, 11,680. Obviously, there's a bit of a trend line there. So if we get up through 11,700, then it'll be up maybe into the 11,850 area. So yeah, the levels that I've just mentioned there, they're the ones to watch, but I don't know which way it's going to go. It doesn't even seem to be following the US, so we're not even getting direction from that.